Hey guys, welcome to our channel where we'll always bring you the latest and the greatest in cryptocurrency. If you are a beginner who knows nothing about it, then this video is for you. The main focus of this video will be explaining the basics, and by the end of the video, you should have a pretty good idea of how things work and what crypto is. Let's jump right into it. First of all, I am sure many of you have heard about Bitcoin and Ethereum, but don't really know much about them. So let's start off with the most popular one, Bitcoin. When people say crypto, they usually mean Bitcoin. Bitcoin was created in 2009 by an unknown person or a group of people under the alias Satoshi Nakamoto. Bitcoin is a digital currency, which means that it is not controlled by any government or bank and operates independently. The reason why it is not controlled by the government is because it uses a decentralized system called blockchain. Blockchain is a system where multiple computers store a copy of the transaction data, and each computer has an identical copy. This makes it almost impossible for hackers to attack and change data, since they would need to hack every single computer in the network. That's basically what crypto is, a digital currency based on a decentralized system. As of today, there are more than 8,700 cryptocurrencies and counting, and Bitcoin is only one of them. Many people think that Bitcoin is the best long-term investment out there, but keep in mind that the price fluctuates a lot, and that's mainly due to speculation. Bitcoin is also the first decentralized digital currency, so of course it's going to be the most valuable one. Right now, 1 Bitcoin equals $114,000, and there will only ever be 21 million Bitcoins. In simple terms, the maximum supply of Bitcoin is capped at 21 million coins. When Bitcoin was created, there were already 10 million Bitcoins in circulation, and today there are over 18 million Bitcoins in circulation. This means that the remaining Bitcoins are rare, and as demand increases, their value will increase too. Another important thing to note is that there is a limited amount of Bitcoins you can earn every 10 minutes. Every 10 minutes, miners get rewarded with 6.25 Bitcoins. These rewards are given to miners for solving complex math equations. For every equation they solve, they receive a certain amount of Bitcoins. Now, if you don't know what mining is, it's basically using your computer to help the network reach a consensus. It's quite hard to understand, but I tried to simplify it as much as possible. You can learn more about it in another one of our videos. The next crypto I want to talk about is Ethereum. Like I said, there are thousands of cryptos, and picking the best ones is kind of difficult. They all have different purposes and serve different functions. One of the best ways to choose a coin is to first understand the purpose of the coin. If you buy a Tesla car, you are buying an electric car. If you buy a Ford car, you are buying a regular car. You wouldn't buy a Tesla thinking that it's a regular car, or a Ford thinking that it's an electric car. The same goes with crypto. They all have different purposes, and you should research them before investing your money. Ethereum was founded by Vitalik Buterin when he was just 19 years old. He wanted to create a platform where developers could build applications using crypto. Unlike Bitcoin, Ethereum is not only a currency but also a blockchain-based software platform that allows developers to build applications on top of it. Ethereum uses smart contracts, which are basically agreements written in code. Smart contracts allow two parties to enter into an agreement without the need for a third party, like a bank or government. These smart contracts can be used for many things like voting, storing data, and even creating new cryptocurrencies. Applications built using Ethereum are called dApps, which stands for Decentralized Applications. There are thousands of dApps built on Ethereum, and some of them even have a bigger market cap than some cryptocurrencies. Developers pay transaction fees in the form of Ethereum to run their applications. Ethereum is the currency of Ethereum, and as of today, 1 Ethereum equals $4,000. Now we got to talk about stablecoins. Stablecoins are cryptos that are pegged to a stable asset like the US dollar. Most stablecoins are centralized, which means that they are controlled by a company and can easily be manipulated. One of the most popular stablecoins is Tether, which is pegged to the US dollar, 1-to-1. This means that 1 Tether should always equal 1 US dollar. However, Tether has been accused of not having enough reserves to back up their tokens. They have been fined by the government for not being fully backed and operating in New York without a license. Other popular stablecoins include USD Coin and Binance USD, which are both fully backed. The reason why stablecoins exist is to reduce volatility. Cryptocurrencies are very volatile, and a lot of traders use stablecoins to avoid losing money due to price fluctuations. Of course, if you use a centralized stablecoin, you trust that the company won't scam you. But as long as that doesn't happen, stablecoins are great for trading. The next thing I want to talk about is NFTs are becoming more and more popular every day, and they are indeed a great way to make money. However, I've seen so many scams related to NFTs. A lot of people have lost lots of money because they didn't understand what they were buying. NFT stands for non-fungible token. Fungible means interchangeable, so a non-fungible token is a token that is not interchangeable. To put it simply, NFTs are unique and cannot be copied. Just think of it like a one-of-a-kind baseball card. No one can copy it or replace it with another card. NFTs are similar to cryptocurrencies in that they are both digital and use the blockchain to record ownership. However, unlike cryptocurrencies, each NFT is unique and cannot be divided into smaller units. Some NFTs are worth millions of dollars. People collect them, trade them, and even use them as investments. Artists are also starting to use NFTs to sell their work directly to collectors without the need for a middleman like a gallery. Now that's cool, right? Well, here's the thing. A lot of people don't really understand NFTs, and that's why they fall for scams. Before buying an NFT, make sure you understand what you are buying and do your own research. Another topic that needs to be mentioned is yield farming. Yield farming is a way to earn interest on your cryptocurrency. Just like how you can deposit your savings in a bank and earn interest, you can do the same thing with crypto. The difference is that you can earn much higher interest rates with crypto. However, just like with traditional banking, there are risks involved. If you use a centralized service to farm your crypto, you trust that the company won't scam you. There are also decentralized ways to farm your crypto, but those come with other risks. For example, you may lose your crypto due to impermanent loss. Impermanent loss is a temporary loss that can occur when the price of one asset compared to another asset changes. In simple terms, if you buy an asset expecting the price to go up, but instead the price drops, you will experience a loss. Before we wrap up, I want to mention one last thing. Just like with any other investment, there are risks involved. The crypto market is still relatively new, and there are many things that can cause the price to fluctuate. It is important to do your research and invest responsibly. Don't invest more than you can afford to lose, and be prepared for the possibility that the price may drop. If you are looking for some good places to start, Coinbase and Binance are two of the largest exchanges out there. Both are great places to buy and sell cryptocurrencies. Coinbase is based in the United States, while Binance is based in Malta. There are other exchanges out there, but Coinbase and Binance are the most popular ones. You can also use them to buy NFTs. Well, that's it for today's video. I hope you enjoyed it and learned something new. If you did, please hit the like button. We would really appreciate it. And if you're interested in making money with NFTs, check out our NFT guide. Thanks for watching, and we'll see you in the next video.